Welcome back to another episode of Uncommon Wealth. Today we have a guest whose story is unlike almost anyone we've had on the show. Mike Morawski has spent more than 30 years in real estate, has controlled over 400 million in transactions, built a company north of 100 million in value, but also experienced the devastating collapse of 2008, served some time in federal prison, and somehow found a way to rebuild his life, rebuild his business and his reputation from the ground up. Today, Mike is a multifamily investor, coach, speaker, author, and managing partner of Resilience Equity. Mike, welcome to the show.
Thanks, John. I appreciate it. I know I just had you on my show recently, and, we kind of connected, and you were like, oh my God, we need to tell this story. So glad that I'm here.
For those who may not know your story, take us back to the beginning. How did you first get started in real estate?
So, I was in the construction business, and I had a general contracting business. We were building room additions, and I was building about 25 a year, and true entrepreneur, 7 days a week, taking care of all the marketing and contracts and meeting with clients and ordering material and hiring people and bookkeeping and still banging nails in the field. I burned out, and I was pretty fortunate because I had somebody knocking on my door to buy the company. And so I sold the company, and I thought I would take a year off and decide what I wanted to do. But true entrepreneurial spirit, my mind kept racing, and, I couldn't take time off, and wound up buying a couple of two flats in the Chicago market to rehab. And I, during that time of working on those and getting them resold, I met a real estate agent who at the time was really successful and said, hey, I think I'd like to go in the business. And he encouraged me to do so. Went to him, said, hey, teach me everything you know. And, just to date myself a little bit, he made me a cassette tape with all the way he did business on it. And I listened to it over and over and over again. And I just became a sponge of that knowledge and went into the real estate sales business. My first 9 months in the business, I sold 78 homes. Went on to build a team selling about 125 a year. And, 2005 came around, the market started softening, and I knew I'd have to go do something else because, we wouldn't keep that volume up. So I went in the apartment business and, didn't just wake up one morning and say, hey, I'm going in the apartment business. It's something I had thought about for years. Matter of fact, when I was in the construction business, I did a lot of work for a couple of large apartment syndicators, Sam Zell's old company, Equity Residential, and, another well-known company in the Chicago market. And I understood this, John. I understood that you raised private capital from individuals. You married it with a great real estate deal. You stayed in the middle, and as long as everything went well, everybody did well. And we were on fire. In the first 30 months, I raised, about $18 million. We bought 4,000 apartments in 5 markets. I built a property management company managing 7,500 units and, had a company valued at about $100 million. And then 2008 came around, and by 2010, it was like hitting a brick wall in a freight train going 200 miles an hour. And we just totally came off the rails. Wound up trying to save the company. And so what I did was I had 38 different companies at the time. And some were very profitable, others were less profitable. So I started to move money between companies to keep the whole ship afloat, thinking, hey, this is a recession. The markets are going to bounce back. Typically a recession lasts 17, 18 months. There's a 10 or 12% correction. My accountant and my attorney both said, go ahead, you can move money, just leave a paper trail. When the markets bounce back, put the money back. I thought, great, what a great plan. That's what I did. The only problem was that I didn't disclose it to my investors. So because I didn't tell my investors about the movement of money, I got charged on wire fraud and mail fraud charges and wound up being sentenced to 10 years in federal prison. So absolutely got wiped out, lost everything. And, geez, at the time I thought my life was over. I had gone from running marathons and to being 35 pounds overweight, absolutely hated myself and just wanted to die. Being in prison, and I always tell people, I say, hey, I never flew private. I didn't have a boat. I didn't have a fancy car or a big house. I was the neighborhood baseball coach. I was home most nights for dinner and got ripped from that lifestyle to live in a 12 by 12 room with three men I didn't know, nor did I like. What the hell happened to my life? And so.
And how old were you at that time?
I was 53.
Okay.
And so I was 53, went to prison and just like didn't know what I was going to do, right? Day to day, just kind of wandering aimlessly. About 6 weeks in, I walked into the gym and I was just window shopping. I was looking for somebody who was supposed to be in there. And this guy walks up to me, and younger guy, probably 20 years younger than me. And he said, hey, don't let these people beat you. All they want to do is take from you everything you've ever known. And I don't know what happened to me at that moment, that day, but I think we're all faced with defining moments in our life where we have a choice, right? And which choice are you going to choose? Well, he said to me, look, come to my class, start working out. You'll start to feel better. You'll start losing weight. Your mind will clear up. Look, he goes, you can get all that stuff back. What you have to do right now is take care of you. And I don't know what it was, but something clicked for me that day. And I said, okay. And I started going to his class. I started working out. I started losing weight, getting in shape, feeling better. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books while I was in college. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. I was on an outreach program, got to go into the community, tell my story to business owners and college students, and wound up meeting a professor from the University of Minnesota. And he and I co-authored a paper that got published in the Business Journal of Ethics that got taught for a number of years at the collegiate level for forensic accounting and sales and marketing classes. And came home, went into the coaching and training business, and wanted to help other people do real estate investing and not make the silly choices and decisions I had made at the time. And during that time, starting out, I was coaching some people here and there, and found a deal because I was doing a lot of underwriting. I found a deal that made sense, and I went to 2 of my coaching clients. Was a property in Florida. We bought that, but along the way, my securities attorney said, hey, I think I can get you approved by the SEC to go back and be an issuer of securities and a sponsor of deals. And she did.
Wow.
So it's almost like my whole life has gone in a circle, and transformed. And, today I love to tell my story because I talk really about the 5 mistakes I made. And that's, I grew too fast as a business. I had no business buying 2,000 units in 1 year, thinking you were going to stabilize everything and keep everything running well. I was over leveraged. So I owned $60 million worth of real estate at 85% LTV, which is just brain damage. I was undercapitalized as a business owner. And, I had 100 people working for me, wondering how I was going to make payroll every week. I didn't pay attention to the details. So asset management was not something that was readily talked about. And, you know, especially when the market is good, you don't talk about that stuff because it's just your trajectory is just straight up. And then the fifth mistake I made was I didn't listen to people who were influential in my life and told me that they didn't like things that they saw going on, and specifically about my partner and things like that. So, so I really think people need to look out for those things, especially in a changing market where we are today, in today's market. And there's ways to protect yourself from all of those issues. So, I came home. I'm in the coaching and training business. Own and operate a number of multifamily properties. Again, every property I'm involved with one of my coaching clients. Got a couple of books published since I've been home, and I love what I do. People have said, hey, why don't you do something else? I go, I don't know how to do anything else. This is my life. I've been in it so long.
I think many people can understand losing money. Very few people can understand losing everything. How do you mentally come back from that?
Yeah, I didn't think I would. I spent that initial little bit of time walking around thinking my life was over. That was it.
And how long was that? So obviously you got to get acclimated to that. How long were you just lost inside there?
Yeah, about 6 weeks before that guy walked up to me and said, what he said. And I have a funny story around that too, but he walked up to me and I started going to his class and started working out. But it really was about 18 months before I figured out that and really accepted that this was my life. This is where I was going to be for the next several years, that I could either accept it or continue to fight it. I finally quit fighting it and really started to make some changes in my life and knew that I was going to go home a different man than when I went in. So
when you were in, what kept you going? Once you started working out, once you started going to his classes, what kept you going?
Yeah. That's an interesting question. One of the things that kept me going really consistently was that I wasn't going to allow what happened to me to break me, that I was going to go home and make a difference in people's lives, help investors, achieve financial freedom. And I was going to go back and really change the way that I did business, but more importantly, help other people to not make mistakes and to grow financially and professionally and personally.
Did your definition of wealth change as a result of being in there?
Incredible. Yeah. So I used to always think, man, if I could just make $1 million every year, my life would be so much different. My definition of wealth used to be, it was financial wealth. And today it's more relational wealth, right? How are your relationships? How's my relationship with you, John? How's my relationship with my girlfriend? How's my relationship with my investor partners and business partners and people that I meet? Is that relationship solid enough to, be important for other people, and how do I help other people?
And if someone's listening today and has built significant wealth, but has never experienced a major downturn yet, what would you want them to understand?
Yeah, you can't let your past define your future. So even if you make a mistake or have made a mistake or a mistake is pending, you can't let that define your future. I think that's the big thing for me. And the example that I try to set for everybody else is, you know, I might have been behind a wall and locked up, but I think there's a lot of people that are in prisons outside of there. Alcoholism, gambling, drug addiction, sexual abuse, physical abuse, verbal abuse, people that grew up in dysfunctional households, and you know, and I firmly believe that you can go to a new chapter in your life and not have that stuff bother you, you know, direct where you're headed, right? Just because it happened to you doesn't mean that you can't be different tomorrow.
I love that. And you've been extremely transparent about serving time in prison. Many people would have avoided that altogether, but why have you chosen to openly share that part of your story?
Yeah, boy, you know, and that is interesting too, because when I first came home, I was like, should I share my story? Should I not? Should I tell people? People are going to find out anyhow. If they Google my name, they're going to see. And I made the decision because I really felt that my story could help other people. You know, I've spoken a number of times publicly, and it never fails. Every time I step off a stage, somebody walks up to me, and my brothers just went to prison. I have an uncle that's been in prison for a number of years. I've had people walk up to me, say they were in prison. I've had people walk up to me and go, you know what? I was just going to make this business decision, but because of what you said today, I'm not going to make that choice. I'm going to make this choice. And that's what I love to be able to do, is help people make better decisions that will affect them in a more positive way.
Could you ever imagine when you were inside that this would be your life now?
No. Well, probably 4 to 5 years in, I did. I started to imagine what my new life was going to look like. And, you know, I don't think I was 100% spot on, but I was 60% spot on. And yeah, but it took me 4 to 5 years to really get a handle on that. And then I can tell you that the last 10 months before I came home, I really had a vision and a focus on what my new life was going to be. And it was nothing like what the old life was.
How did your experience inside and going through all of that before you got in change how you think about your reputation and legacy?
Ask me that again. I want to make sure I really...
Yeah, how did your experience change how you think about reputation and legacy?
Yeah. Your reputation is really important. This kind of goes back to the question about, you know, sharing my story. I have a handful of friends that that have come home before me or after me, and they refuse to tell anybody. And I have a very close friend. We've been friends for, you know, a number of years, and we had lost touch, and we reconnected in prison. He shows up one day, and it was like, wow, what are you doing here? You know? And he refuses to tell his story to anybody. And I think I watch him walk around just kind of trapped. And I tell him often, I say, you know, if you would just share with people, you wouldn't have to worry that somebody was going to find out. And you really don't know what you're going to do for somebody else. And the conversation always revolves around reputation. Well, what will people think? Well, who cares what people think, right? This is a learning piece, an educational piece that I got, that I paid dearly for, that most people don't have. I always say it's a notch in my belt that most guys and women don't have, but it's one you don't want either, right? Because it's awful. And your reputation, I think if you're honest with people, they say we're in a society of second chances, right? That people want to give you a second chance. And I think that's partially true, but not 100% true. So me rebuilding today takes a lot longer than, it did before. But that's okay. I'm patient most of the time.
Most of the time. So fast forward to today, you're actively investing again, which is incredible that you were able to get your SEC registration back. That's almost sounds impossible. And now you're going through resilience equity. How do you evaluate deals differently now, today, compared to 20 years ago?
Oh, much differently. So I'm much more conservative in my underwriting today. I teach people to be more conservative. One of the key points is don't over leverage, so I'm looking at deals that are 65% LTV or, 60, 55% LTV because you need that equity piece in there in case the market shifts.
Yeah.
We look at deals today and we, no first year rent growth. And, we're very conservative in our future rent growth. And, so there's a lot of things that we do differently today than I did before. But we're also in a down market. But I firmly believe that even if we were in an up market, that we would not be over exaggerating. I see so many operators, push the rent growth to make the numbers look better. They wind up paying more for the property because they push the rent growth. I want to buy deals today on current numbers and current profitability, not on tomorrow's numbers or tomorrow's profitability, because I have to work too hard to get there, and then you're at zero and got to start over again. So it's a totally different view today. I'm really market driven today also. So the markets have to make sense before the deal makes sense.
And what percentage of investors today do you think are underestimating liquidity risk?
I don't know that I have a good answer for that. I would say that there's probably a pretty good percentage of people that are. I'm seeing right now in the market, though, deals not trading like they were the last couple of years. I think there's a slowdown in purchases, and I'm calling it like that because of the number of deals I'm looking at weekly right now. There's a lot of deals coming across my desk and on the market today. And I just don't think that the buyer activity is out there. Plus, another good sign is that, I've got 5 or 6 brokers a week calling me right now. Did you see this deal? Do you want to look at this? And when the market is good and they're selling deals, they're not calling.
Yeah.
But they're calling today.
What keeps you up at night, or what keeps you awake at night today that didn't concern you when you were younger?
Yeah, investor cash flow.
Mm-hmm.
Dividends, distributions,
meeting those obligations.
Right. Being able to, my goal today is to be a good steward for my investors, to make sure that they're in a deal that gives them preservation of capital, cash flow, long-term wealth, and then tax planning strategies. Those are 4 things that I try to accomplish for my investors. And, if you say, by asking me what keeps me up at night, that's what keeps me up at night.
You rolled right into my next question, which was, what are sophisticated investors asking today that they weren't asking 5-10 years ago? Was it cash flow, safety, liquidity, tax efficiency, right? And those are the things that you kind of just hit on. But what are they asking about now?
Yeah, well, people don't ask when the market is good, right? And, people are, dividends are being made and there's no capital calls on deals. And, there's no deals that are falling apart or going sideways or being taken back by the bank. You know, people don't care. Today they care, right? Because all those things are happening. I think there's a lot of investors sitting on the sidelines waiting for the mainstream media to say, hey, the market has changed. And if they wait that long, they're going to miss the first 24 months of the change because we're in it right now. And I really believe that investors need to get off the sideline and get back in the game because you're going to catch the next couple of years of, that slow growth where most of that ramp up period is going to build the performance of the property beyond that. And by being involved today, that gives you an edge over everybody else.
It's also a balance, though, between protecting wealth and chasing returns, right? And so, how are your investors kind of balancing that, or how are you helping your investors balance that?
Well, I think there's always asset allocation, right? And I'm a big believer, and I wasn't before I went away, but I'm a big believer in diversification. Have some money in the stock market, have some money in gas and oil, have some money in multifamily and senior living and or senior housing and self storage. So diversify. If I have an investor today say, hey, I have $250 or $500,000 to invest in a deal, I don't want all their money in my deal. I want them to diversify that a little bit. And even diversify in the fact of being with multiple operators, right? Split that money up. And, I think that hedges your risk and gives you a little bit more opportunity to, do beyond average.
And as investors mature, they often move from asking, Mike, how do I make more of what I've already made? Or how do I make, let me start over. As investors mature, they often move from asking, how do I make more money to asking, how do I keep more of what I've already made? Are you starting to see that shift among your investors?
Yeah, I think, people find some security in T-bills and high yield savings accounts today because, they can earn 4% and, not have the risk involved. But here again, it's asset allocation. I think if you are invested in multifamily, money doubles every 5 years at a rate of 15%. If you can be in a multifamily deal that's, projected to do 15, 17% a year IRR, you're going to double your money or do better than double your money. Especially going forward, when the wind is at your back, which it's, the sail is starting to shift right now. When the wind is at your back, you're going to do well.
If you could sit down with your younger self when your company was worth $100 million, what would you have done differently from a wealth preservation standpoint?
I would have got my ego out of the way. Because honestly, to build a company that big in 30 months, you kind of feel like you've got the world by the short hairs. Without getting too descriptive on your show. I would have told myself to check my ego. Because I thought that, man, people were throwing money at us. Banks were throwing money at us. The goal, I thought we'd scale to 10,000 units. I'd be in a different place today if we would have kept just one of those properties. From a financial standpoint, I bought a deal in 2008, right as the market was starting to turn. We paid $15 million for a 450 unit deal. It was like a 13.5 cap at the time. And about 2 years ago, I met another investor that bought that same deal at a 4 cap and paid about 60 million for it. So if we'd have just kept one of those deals from
Wow.
then till now, real estate goes up in value. Time corrects everything. So even if you're in a deal that's a problem, and you can nurse along for a period of time, time will correct everything. So
When all's said and done, Mike, what do you want your legacy to be?
that I never gave up, and that I cared about everybody else's outcome.
What does success mean now?
Yeah, success today is about completion. So if I start a project, I want to complete a project, whether that be, capital improvements on a property, whether that is completing a capital raise, whether that is helping one of my coaching clients to get their first deal done, get the money raised, get the property running right, and increasing value. That's in business. For me, success today in my personal life is good relationships with the Lord, Jesus for me, and my girlfriend, and the people in my life.
Do you think legacy is something we leave behind, or is it something we build every day?
It's something we build every day to leave behind.
Yeah. All right, some rapid fire questions. So don't think too hard about it, just whatever comes first to the top of your mind.
All right.
Biggest financial mistake?
Not telling my investors about the movement of money between companies.
Best investment you've ever made?
A 64-unit multifamily deal in a cornfield outside of Indianapolis that we bought, where all the rents were $250 a month below market rate. And over the first year, got 80% of those rents up, increased the value of the property somewhere about $1.5 million in the first year and a half. And it cash flowed. It was an ATM machine.
All right. What's the most overrated wealth strategy out there?
I think, when people say that these are no-brainer deals, I think it's overrated. There's no truly passive investments out there, because even when you invest money as a passive investor, you need to stay plugged in. You need to watch your money, have conversations with the operators, be involved. It's just not as much as if you're the operator. And I think it's overrated when people say, "Oh, it's just mailbox money. It's going to show up in your mailbox every month." Untrue.
Most underrated wealth strategy?
I think something that's underrated right now are these data centers. I think there's a lot of opportunity for an investor in a data center today, if you can get involved, because the changing of technology is causing there to be more places for storage. And though, when you look at AI, where's all that data going to be? So
I agree. All right. 3 more quick one-hitters. One habit that changed your life?
I have a few of them, but one habit that changed my life, getting up every day at 4:00 and going to the gym.
Do you still do that?
Oh, yeah. Yeah.
That's awesome. One book every entrepreneur should read?
Yeah. So I've been talking about this for the last year, but Tim Grover, who is a personal coach for Michael Jordan and Kobe Bryant and LeBron James, wrote a book called Winning. And if you need a good ass kicking, read that book.
Speaking of books, you wrote a book or a couple books.
Yeah.
Why don't you talk about that for a second?
Yeah. So when I was locked up, I wrote a couple books, but when I came home, I wrote another book called Multifamily Investment Secrets, Your Explosive Guide to Wealth in Multifamily Real Estate. Amazon bestseller. This isn't about my story. This is about how to buy multifamily real estate, syndicate it, and do deals. So I walk you through, all the steps involved in this book. It's a great book. I've had a lot of people comment on it and how much they've enjoyed it and how it's helped them grow. I tell a lot of stories in here of investors I've worked with, and because most of my business over the years has been investor-based business, even when I was selling residential real estate. So you can get this on Amazon.
Yeah, we'll put a link to it in the description section for all the listeners. They can click on that. One last quick question. What does uncommon wealth mean to you?
Uncommon wealth. I think it's wealth that most people don't have. And I don't mean financial wealth. I mean spiritual wealth, physical wealth, relational wealth, emotional wealth is uncommon wealth.
I love that. Mike, you've experienced something most people never will. You've built significant wealth. You've lost significant wealth. You've rebuilt significant wealth. And you've done it with the level of transparency that I think is incredibly rare and extremely refreshing. And for those of you who want to learn more about you, Mike, Resilience Equity, your coaching, your speaking, your book, where can they find you?
Yeah, thanks for asking, John. So I'm a huge networker, and even if you want to just reach out and say hi, I love that. You can, best places are social media. So wherever you hang out on social media, you're going to find me. Best places of communication, LinkedIn, Instagram, or email me direct at mike@mikemorawski.com. And I'd love to meet you and talk with you.
Awesome, Mike. Thanks for being on the podcast. Appreciate it.
Thanks, John.